Welcome to Markets Now. I'm Michelle Rook along with Arlan Suderman with StoneX Group. And Arlan, everything up on Monday. Let's talk first of all about the grain trade. Wheat has been the leader here, and how much of that is production concerns versus how much of it is a little bit of concern and uncertainty about the Black Sea Grain Initiative?
Yeah, the table was really set for this with the massive short positions in Chicago wheat coming into the spring, and then when we get the lower production estimate, which I expected a bullish surprise on the production estimate, but is even more bullish than I anticipated. Really confirm it. And the wheat tour this week should add additional confirmation of that as well. When you look at the Black Sea Grain Initiative, yes, it matters a whole lot more when you have a small hard red winter wheat crop. But not just that, it matters the dryness that we currently have in Russia and Kazakhstan spring wheat belt. It matters that Argentina still is dry. It matters that Australia tends to have small crops in El Nino years. So we're shrinking the balance sheet. I think USDA's global production estimate is too high. Now, as far as the grain initiative, it does look to be in trouble. Will it get extended? If not, I think we'll still find ways for grain to move, but it'll be at a higher cost, and that tends to be inflationary across the board then.
So wheat, you mentioned the funds being short there and covering some of those positions, but let's pick up HRW in particular. We're still struggling to close above that $9 mark there on the July Kansas City wheat. That's going to be pretty important to keep this momentum going, isn't it?
It is, and it's tough for it to really break that much further above the Chicago market and above the corn market. All of them are related to one another. At what price is HRW fairly priced? We think it may be fairly priced where it's at, but yet the premium there versus the fundamentals of soft red winter wheat still makes some sense as well. I think this is a market that may struggle to go the next leg higher in Kansas City until or unless we have new data that would justify doing so. Now, this crop is far from made yet. Will we see additional loss? Will a small crop keep getting smaller, or will we find out that we overestimated the losses? It comes down to abandonment. That's going to be the primary story now. With all the rains that we're getting in many areas of the plains, some of those wheat acres that maybe would have been harvested, with the moisture it's there, they may say, maybe we'll just destroy that and put in a summer row crop and have better potential longer term.
So Friday, USDA figured 33% abandonment. Do you think it's going to end up being higher than that?
Oh, that's a real possibility. And I think it is going to be really weather related. If the farmers see greater potential for putting in a summer row crop, then it becomes tempting now that you have the moisture to go ahead and do so. Maybe bale what little wheat is there off, or maybe graze it real quick, flash graze it or something like that. Try to make some use of it, but then put in a summer row crop. And suddenly that looks like more of an option with this weather pattern that we're getting now.
Can corn keep following the wheat market, Arlan? I mean, you've got tight stocks yet, but you've got the headwind of this big crop coming up here that's pretty bearish. So, that's a kind of a tug of war there.
Yeah, I think we'll see a separation again of the old crop and new crop. Be easier for old crop to follow to some extent, or maybe reduce the speed at which we lose. New crop's going to struggle, particularly if we don't see follow-up evidence that we can actually export as much as what USDA says. They have their export target for new crop at 2.1 billion. I think that's about 300 million bushels too high. Then when you look at the increase in feed usage, a 7.1% increase in feed usage, when USDA also said that pork production is going to be flat in 2024. We have contraction in the breeding herd. You look at the cattle herd, they're expecting 8% lower beef production in 2024, down 13% from 2022. Yet we have a 7% increase in feed usage. That doesn't make sense. I know when you have a bigger crop, they usually assume that feed usage goes up, but you have to have the animals to justify doing it. And right now, we don't have the animals to justify that. So I think, if anything, we may be even more bearish on new crop, making it separate a little bit more yet from the wheat market.
Yeah. And old crop July, we still can't get above $6, technically, can we?
Yeah, that's going to be a tough area, I think, in order to go higher, particularly with the exports being a problem. USDA slashed 75 million bushels off the exports, but yet when you look at export shipments to date for the marketing year to date, we still trail the seasonal pace needed to hit USDA's target by 117 million bushels. We can close that gap if we could get some consistency in export shipments, but it's up one week, down the next week. Very erratic. We can't get anything steady and consistent. We did see strong shipments last week to China, which really impressed me. I think it was around 18 million bushels went to China, but China's also been canceling a lot of purchases because they see that cheaper Brazilian crop is going to be big and is coming on fast. And they figure in another 45 days, they'll have a lot of cheaper Brazil corn. I think that's when our shipments are really going to shut down going to China.
That's right. And that's a fear here, is that we'll have more cancellations on the corn. Okay, what about soybeans? The meal and oil market kind of started off strong this morning. We got NOPA crush out, and that kind of squashed that just a little bit. But we did get some sales, soybean meal sales to Poland this morning. And you still, are working on that smaller crop last week from Argentina. So where does the market go from here?
Yeah, it's a little bit different dynamic now with the Argentine crop getting small enough that it's going to make it difficult for Brazil to totally offset the shortfall. And so I do think we're going to see a little bit more increase in soy meal. The market's going to be a little more sensitive to these sales of soy meal. We're going to be monitoring that closely, and I think it could provide more support for our crush where, with old crop supplies being tight. I'm not as friendly for new crop, but I think old crop we could tighten things up some more. But when we look at exports, that's the other side of it. We're starting to lose ground now. Our shipments had been pretty strong seasonally, but our sales have been really poor, and those poor sales now are starting to catch up. Weekly shipments last week were the lowest that we've seen since Hurricane Ida hit, and slowed down shipments back in September 2021.
Yeah, let's move over to cattle. Of course, we had a lower week in cash last week. That's the fourth week for that. But futures were able to move higher. So we're narrowing that discount. Is that going to continue, you think, or which side is going to give first here?
Yeah, right now I think we're looking at steady to maybe softer type of cash cattle trade this week. Maybe not quite as bearish as what it was. We are seeing packer margins start to improve, a little bit of improvement in the product market. So maybe that can help margins enough to steady the cash market overall. We're still looking at tight supplies. Demand has been stronger than what we anticipated. Domestically, exports have been where we've really been rationing the demand to this point. And we've got a fairly good balance right now, I think, to support that cutout.
You bet. And feeders have been the leaders. Will that continue?
Yeah, and we got some support from the WASDE report showing those tighter production numbers going into 2024. So I think there's some optimism out there with the lower numbers of calves going to be available. I think we're seeing some buyers come in and trying to get a piece of it and want to own some cattle.
And hogs higher today. Short covering, or is that market finally sensing that maybe seasonally the cash market is finding a bottom?
I think that's the hope today, the response that we got. The higher feed costs are going to help support those contracts as well, particularly the deferred contracts. But overall, looking at some breeding herd liquidation and contraction in the hog market, that's leading to flat production as we go into next year. Also, I think the initiative that the Supreme Court supported from California is going to support some higher prices as well. Now, that tends to ration demand, but at the same time, it's going to reduce productivity. I think we're going to see some lower survival rates from our pigs, and it's going to overall increase costs, and that's providing some support.
Yeah, Prop 12, we're still trying to digest that. That's for sure in that hog market. Thanks so much for joining us. Arlan Suderman with StoneX, and that is Markets Now.